Good morning. Thursday, March 2nd. We are uh, we're Stan Ehrlich market analysis, and I always start out with the S&P 500. So, and the stock market indexes, and I'm going to cover some futures contracts, and some very interesting things are happening in interest rate futures and precious metals also this morning. So stay with me. Now, if you have any questions, info@ersignals.com. So the S&P 500 currently is getting a little bit firmer, but we're still down a very minor half a point. On the opening this morning, on the left side here, we gapped down, and it is a new low for the trend down lately. Definitely below the lows I expected as going back a week and a half or something. And that would be below this green line on the right side now. I'll pump it up full screen. And that is a head and shoulder bottom, maybe. And I am injecting the word maybe now because we have so many violations of the rule in the last week. It looks like it started back in June. October 13th is absolutely, unequivocally, emphatically the bottom of the bear market of 2022. It's also the October lows. It's also a bullish engulfing. It's also an oversold condition. And it turned green where my custom code for ER signals caused it to do that. And that is a major buy signal, which worked great. We rallied into the highs in December, pulled back in late December for what looked like the last shoulder low, and then moved up to and through, pretty classically, the neckline on January 26th, pulled back a little bit more than I would have expected below the green line for a day or so, and then jumped into new high ground, but it got overbought, and it bumped against the resistance area, so you're not surprised it's going to have another correction, which it did. Now, it's not supposed to get below the green line, which is the neckline, and that was again drawn above the high on August 16th, which was overbought, no surprise, and the high that was made on December 13th. Those are the two pivot points. That's the highest high after the first shoulder low, which was June 17th, and the highest high before the last shoulder low, and that shoulder low is December 22. And that's how you draw the necklines. For head and shoulder bottoms, they're typically flat or downward slanted, usually. Occasionally, probably less than 10% of the time, less than 5% of the time, maybe, they can be upward slanted, but this is typical. What's not typical is that we are again trading all day below the neckline. Ladies and gentlemen, I have got to stop talking about this giant potential head and shoulder bottom as a head and shoulder bottom. It just is violating too many rules. I gave it plenty of elbow room. I gave it too much tolerance. That's it. Although the overall situation, and I am now going to turn this into a very faint green line. There it is. It's still there, but you have to struggle to see it. Maybe I'll bring it back later as being important for some reason. Right now, I have a red line or light red pink, and it is support. A few days ago, it bounced off of it. Yesterday, it bounced off of it. Today, it opened a little bit below it. It is a new low for the move down since the rally high on February 2nd. So it's exactly 1 month for a new low by a minor amount, nevertheless a new low. And it's now trying to get higher on the day, but not so far. We are 10:09 California time, so there's almost 3 hours left to go. What it is doing is bouncing off this red support line and staying above the old bear trend line for the 2022 bear market. this dashed blue line, and I'll make that even profounder now because it is more important, is holding. We don't want to get below that, or you're completely deteriorating, I should say more profoundly deteriorating the bullish story. And I still have a bullish story. And that is, since October 13th, you have higher highs and higher lows. That's the underlying definition of a trend, up. We're almost oversold, extremely close. The last time we were extremely close and slightly oversold was at the end of December, December 20th. 2 days later, you have the lowest low for the shoulder. And I should stop saying that because now the head and shoulder is pretty much ruined. But the lowest low for that break was oversold 2 days earlier. And that is one of my major tools, is a custom relative strength index at the bottom of the screen. When you get above the red line, the market usually tops out, and very quickly. And the opposite, when you get down to the green line or below it, the market usually bottoms out. Now, the bottoms are very often intermediate to long term. I should say intermediate is for weeks, and long term is for months or more, of course. So what happened the last time we were actually below for a few days? Well, we had a nice rally for several days, and that was the low that was at the end of September. Now, we did get oversold barely, but oversold on October 13th, the mother lode of profound turning days and signals and all the stuff I love at the same time. Wow. And I've been making these recordings way before last October, so I screamed bloody murder that was the bottom at the day that it happened. Okay, when's the last time it got oversold before that? Way back in June at the last shoulder low. So every time this market gets into oversold condition, I start getting bullish, usually before it actually turns back up. Now, I'm also cognizant of getting super close. Now, 25 is my lovely level of oversoldness, if that's a word. And today we got 25.52, sorry, 54. So super close. May be good enough. I've certainly seen occasions where it ended up, in retrospect, being good enough. I can't tell you right now that it is good enough. I'm saying we are probably close to a rally, which could be a very significant turn. It is a little bit above the major old bear trend line, now a support line. It is also extremely close to the 200-day moving average, the Dow Theorist 200-day long-term standard moving average, MA moving average, not exponential, not step-weighted, nothing fancy. So there's a couple of reasons to believe that we're in the ballpark. We should be turning up soon. I'd love to see a bullish engulfing. I ain't got one yet. In fact, we're still down 40 cents, but close to highs, 2.5 hours plus to go, 2 hours, 45 minutes. So there's a chance. Stay tuned. I'm looking for a turn. Should be coming pretty soon, time-wise. Should be coming pretty soon, price-wise. In other words, not much lower, if any, and you won't have to wait too long, I hope. Let's go look at the other charts. Now we're going to be looking at the DIA, and it's a bit of a different story because its bottom formation involves the same June low, which was, again, like S&P, a head and shoulder bottom by itself, which worked great. A much smaller one, starting May 20, June 17 for the head, and the last shoulder on July 14th, a couple of months in size. Pretty normal size-wise. The head is a double bottom, including, of course, October 13th, the second low. Now, we don't really have a head and shoulder for the last shoulder. You could have made some sort of story for it. It wasn't very good during December. Let's call it November, December, January. But it's not, all the body parts really aren't there. So, nah, but there is a low, and that is profound. And we challenged that low, making a minor new low yesterday. But hey, oversold conditions are paramount. It's the second time the DIA has been oversold at a slightly lower low in the last week. We are higher on the day. We are actually higher than yesterday's high, and we are pretty much maintaining that level for a significant amount of time this morning. And for the DIA 1-minute chart, which is this chart here, it's not doing too bad. It actually opened higher right there, dipped down a little, made higher highs for a couple of hours, had a minor correction back to about the opening, and then it's starting, it looks like, to gain more strength, but we'll see. So I like the way the DIA is acting very much. The QQQs are almost the exact opposite and very similar to the spider. Lower low, a little below a support line, new low for the last month, a little lower on the day at the moment, near the high of the day, but the high of the day is still even lower than yesterday's close. So you've got a down day, not by much. Again, with 2 hours plus to go, anything can happen, literally. But I like what I see so far. I have been struggling to scream bloody murder for a buy signal for the last couple of weeks because I thought the market would hold, excuse me, at a little bit higher prices than it has succeeded to hold. But I'm looking at this, and remember, this is a little over half a century worth of experiencing yakking at you right now. So a little over 50 years. So I still think I'm okay with these commentaries, even though it's making lower lows. Hey, guys and gals, if I'm going to pick a turning point to the day, I'm going to have to say something before and during the day it turns. After, everybody can see it. You're kind of cheating. Enough said about the stock market indexes. I am still looking for a market turn back up. I think it could be fast and furious, and all of a sudden, it may very well be the result of some government comment, political comment, or something else that we don't necessarily see, the market doesn't necessarily see coming. I also want to mention that the mess, I like to call it, is the micro E-mini, MES, is oversold today, daily data. First time. Of course, a new low for the move down, but that is something to be very, very, very much aware of for those of you that like to trade the micro E-mini. The E-mini itself is also oversold, no surprise. Same thing, just a smaller contract. And I like that also. Now, neither one of them are higher on the day. There's no reversals yet. All I can say is oversold. Futures, futures, futures. You know, I started out as a commodity futures broker in 1971 with Conti Commodity Services and had a commodity broker's license for about 35 years, a stockbroker's license for a while, president of a forex trading firm for 5 years, hedge funds manager, you name it. I've been there, done it, and love it. Now, corn. Oversold for a few days. We broke very important support a couple of days ago. I commented about the time. I commented before it happened. I've been talking about a down move here for over a week. Now, it failed to break a bull trend line, which I was looking for to begin with, but it's a failure, so you got to go with the flow. Again, you can never make a market do what you want it to do. You always have to move with it. That's flexibility, a synonym, I guess. We got oversold, substantially so. We bounced a little yesterday and a little bit more this morning. No surprise. We may bounce a little bit more still. In other words, above 461 and a quarter, today's high. Wouldn't change a damn thing. We might even get to 656-ish and turn down. Damage is done. I think the market is going to be trending lower. I'm looking for significantly lower levels. Rally or no rally, we could have seen this 1.5 day rally already. Next chart. We got live cattle. Yesterday, I screamed bloody murder, new short sell signal. We opened at the high of the day today above my new short offer. We're filled on the opening at the high short. Automatically with the ER3 trading system. Interested? Email me. We're almost low and last, below the lows of the last week and a half. I love it. This is just exactly the way the strategy technique, it's taken me over 10 years to put it together with a variety of experts in the field. It's working great today with this particular signal, live cattle. Doesn't always work perfectly. When it doesn't, we are stopped out and we are out with usually very reasonable to small losses. When it works, it can work spectacularly. How about that one? Buy signal way back on September 29th. That was the lowest low ever since last week. Prices were about 153, and this sucker went up to 166. Live cattle. Okay, next chart. I'm looking for lower levels. Sell signal yesterday. Wheat. A week and a half ago, 2 weeks ago, we got a sell signal, and that was in the ballpark of 770. We're now around 710. That's a 60-cent drop. Last I heard, it was 50 bucks a cent. So good money in only 2 weeks. But it got oversold. Don't sell short a market that's oversold. Look for buy signals. Look for reasons to go long. Look for reasons to get out of shorts. I don't think I want to get out of shorts in general. I think I want to stay short. We've broken into new low ground for quite a bit of time. And I like the look of this. I'll mention again, this is 1 year now since the beginning of the war. We sold short on the high day after a whole series of limit up moves in a row, screaming the maximum amount higher per day, and we got a signal on the top. Don't try that at home alone. Looking for another buy signal someday soon. Right now, a little oversold. Expect maybe a little bit more bounce, but I'm bearish, looking for lower levels. Next, that's wheat. Next chart. Cotton. A little bit of a problem today. We had a buy signal, that's the green price bar, on February 24th. It worked okay for a few days, including yesterday and this morning. But I don't like seeing a bearish engulfing, which we have so far, and it probably will stay that way when I'm bullish and or long. So, warning, if you're long, be careful. That's about it. You had plenty of chance to take a small profit, but it was small. Pardon my cough. And I am currently a little on the neutral side, but hoping, and you really never want to trade on hopium, that the market is going to turn and start to rally back up. Again, I just don't like the bearish engulfing. It makes me worried. Next chart. Interest rate futures are very, very, very important to the overall trend of the stock market these days. When this chart goes down, it means rates are basically going up on a moment-to-moment, day-to-day basis. I was not expecting it to drop off this sharply, this quickly, this much. And basically, I said so in the last few days. We also got a buy signal that did not work. So we're out of that at the worst at 125 or hair under. We're now in the high 22s. So we're flat. I'm looking for another buy signal because look at how many days in a row it has been oversold. This is a lot. Markets don't stay oversold this long very often. But look back here in September. You actually were oversold for that amount of time. And all of a sudden, ta-da, we have a green bullish ER buy signal that worked okay again for another several days. There's some money to be made there easily, but it didn't really change the overall trend. Like our previous sell signal on August 2nd was the top of a huge rally and the beginning of all of this bear move. And another buy signal that worked extremely well back in June of 22. So we're entering conditions that cause me to raise a green flag. Get ready. I want to buy this soon. I don't think it's got much more downside potential, and I do think it's going to be a profound turn up soon. Not yet. Same exact commentary for the 10-year notes, as you might expect. Bad buy signal a week ago, lost a little. Very oversold for several, 2-3 weeks. Coming down to a significant support area. Previous lows are very close. We'll see what happens. Same commentary as bonds. Next, natural gas. We picked the bottom of the market to the exact day, February 22nd. We have a new high today, a little bit lower current quote, nothing significant, not overbought. I think we can see a little bit higher levels in the next few days. Not too worried about this. I like what I see. System is probably still staying long, period. Great, no problems, pick the bottom. Next, the E-mini, of course, is the S&P 500. I've made my comments about this already. We did get officially oversold on the MES, micro E-mini, MES, and the E-mini, this chart. So looking for a buy signal, not expecting too much lower. We'll see what happens. Next, silver, gold, and platinum. All three had a bullish engulfing ER buy signals during the last few days. Now we're dipping down again and oversold again and triggering off an ER3 buy signal around the current quote. If you're interested in going long silver, I would put an underline, boldface, italics under the word listening or expecting a turn up or wanting to buy. I'm not going to say do it. I guess I just did. I don't want to be too emphatic about things. That's when you begin to be mistaken. So I like what I see. The combination is great. It's fulfilling all of the buy signal expectations, which includes a little bit of a dip like we've got. We'll see what happens. Next is gold. This situation happened yesterday in gold. It dipped down, hit my little green dot. That's the bid. We're long at almost exactly yesterday's low, really close. And it's still a profit. It's down a little on the day. I got nothing going wrong here. That's it. Next chart is silver, platinum. We picked the bottom of this bear move. We also picked the top of it before it started going down. Yeah, there was a bad buy signal in the middle. We've had some pretty good sell signals from last summer. Good one right there, August 15th. A classic one on the top of a very nice rally in the beginning of a huge, sharp, quick break. And that was on September 21st. And then another good sell signal, October 7th. Okay. Buy signal a few days ago, new highs for the last couple of weeks, almost unchanged at the moment, down hardly anything. I like what I see. I'm staying long. I like it. Next chart, cocoa. Overbought, get ready to go short. No signals yet. Next, soybean oil. Not really anything significant lately. Remember, what you should be glancing at, if you want to stop the video, fine, to get more time to look, is for these green and red bars. You will frequently see them at major turning points, and I will promise you that. Okay, I don't have a license anymore, thank goodness. It's been, I don't have to get fingerprints and all that junk, so I can say that, and I mean it with a grain of salt, obviously. So The system is built to pick the day that the market turns up or down, minor, intermediate, or major turns. We do have false signals like almost every system I know, but the trick is let your profits run and limit your losses. You've heard that before. Next. No comment, OJ. I'm going to pass on hogs and passing on heating oil, except watch out, even though it's come up for a few days now, this market is, I think, about to drop below those two green dashed lines. Those are major historical support lines, especially the lower one. Breaking below the lower green line, we're going to see a long-term bear market perpetuate itself. Next. Coffee, no comment. Next. Sugar, no comment. Soybeans got oversold for one day, rallying a little bit. Nah, no big deal. Next. Crude oil, long-term bear market going sideways for a month. I think this is going to break into new low ground also. And when it does, if it does, major bear move. Next. High-grade copper, no comment. Next. Oversold for a few days, and the appearance of the beginning of a bounce, and we already looked at this. This is corn. So I've gone through my futures of 21 different markets and my stock indexes. I'll pass on sectors, not too much interesting today, and I'm going to pass on forex, although I got some interesting signals in the dollar index and the euro dollar. Have a great trading day. Tomorrow, TGIF. Later.